Hi everybody, welcome to this new quick video that I made on indicators, because I know that most of people when they're starting to do trading, they struggle on the choice which one the best indicator that they can use to make trading. So that's why I make this quick intervention. My name is François or Frank Belfort if you follow me on the trading view. I hope that you're doing very well. It's your first time to discover me, the main trainer and founder of Global Street Trader Academie, GSTA. You can find us through the different social media as well, including Facebook, YouTube was the most principal platform that we use to to show what we do. You can also take a look at our website, which is www.globalstreettrader.com. okay, globalstreettrader in one word.com. Okay, so basically I made this quick intervention based on the fact that as I said, now I have more experience. I have close to 11 years on the financial market. But when I'm studying, firstly, I'm asking constantly myself what is the best indicator that I can use to make my trading, because I always thought that indicators is the key to make money in the financial market. So it's absolutely wrong to think about that, because as I said in another video in French, that there's no existing indicator which can provide the best lowest point or highest points to short or to buy, right? It's only use your eyes, as I call the eyes index, because there's no indicators which is giving you the holy grail. You have to spend a lot more time on the financial market, on the asset that you would like to work, and you'll be definitely a master, right? So that's why it's naive to think about that indicators will give you the best points. But although there's no indicator which is giving you the right point to buy or short, but there's also a couple indicators in my humble point of view. It's a very subjective that I said, but there's a couple indicators that you can use for sure, and we're giving you some tools that you can use that to take an advantage for all the market failure or market anomaly. Okay, and those indicators that I would like to giving to you to this video is only 6 indicators in my humble point of view, that you can find that you can use that consistently, and you can definitely and potentially make money on a sustainable way, right? So number 1, there's the RSA. I will put that on my charts here, then you can see not this one, the indicators. So we call that relative strength index, right? The RSA, right? RSI. So RSI has been created by James Wallace. Wallace is a mathematician, proven mathematician, and is applying these indicators to the financial markets. Basically, these indicators will show you the strength of the markets, the strength, the direction, and also is a ratio. Basically, is to show you how many buyers, what's the proportion of buyers we have in this market, and what's also the others proportion of the sellers, right? And the formula is 100 minus 100. I think 100 minus 100 on divide by 1 plus the highest point divide by the lowest point. I think it's something like that, right? So 100 minus 100 on 1 plus highest on lowest, okay? Because they put boundaries, right? So boundaries on the 20% here, as it been interpreted as we oversold. So we basically, you have to make sure if we got in this level, we have to take an advantage. You have to get ready for buy the market theoretically. And also when we are above 70%, we consider as overbought, right? So we have like get ready to short the market. This is a theoretically, again, is not, you know, is not like we're not doing like systematically, right? I sometimes basically is giving like the standard point is that 30% and 70%, but I used to, you know, I used to take 20% and 80%, right? So many people could also use the standard parameters, and basically is the parameters of RSA, and it's very used that you know by all of traders, all of like technical analysts, like in trading floor, in this financial media as a Bloomberg, Reuters. When they make an analysis, they use RSA, right? So RSA is very proven technical indicators, and basically we use that for technical analysis. Before I used that to make my trading, but now I just use that to make a technical analysis. And you can combine that also with other indicators. So it's definitely the most used indicators in the trading. We can also doing also tradism on that. So to find like a hidden divergence and those stuff, or convergence also, to make a great signal. Number two, we have the Bollinger Band. Okay, so Bollinger Band is, we call that BB, right? The BB. So Bollinger Band has been created by also John Bollinger, which is I met him personally in 2010 when he was like in this doing a seminar of statistics applied to the financial markets, because basically his indicator is you know, statistic tools applied to the financial markets. And the Bollinger Band show also what is the what will be the potential direction of the market, right? And also it show you also the profile of the market based on the volatility, and also the like how the market will be react if we have like some exaggeration on the market, right? Exaggeration, which mean when the market, you know, get out of the band, like the band which is, you know, surrounding the market, right? And I really love these indicators because it's a pure statistic. And in stock exchange or in the financial markets, we cannot trade with statistics. We cannot trade without statistics. We need to have statistics. All the strategy are based with a certain probability, and this is the case of the Bollinger Band. And it show you also when the upper band or the upper band and also the lower band are like spreaded a lot. It show you when the market have some kind of exaggeration phases. So you have to make sure that you will be not, you know, against the market, so going with the trend. And then get ready also to, you know, if it's preceded by a long movement here, you have to make sure that to short the market when it's over the upper band, because we consider as a 95% statistically the market like most of time we converge to his mean, by will be supported by this moving average here, which is 20, right? And the formula is very easy. It's the upper band is the mu is the mean, right? Plus lambda is like the constant, which is you know, cap, which is like keep the standard deviation, which is the square roots of the var. So it kept that for the like for two times. So we permit that they calibrate the lambda as the 2 for, so 2 times the standard deviation. So lambda times sigma. Sigma is the standard deviation, which is the square roots again by for the variance, and this is the for the upper band, and the lower band is the opposite. So it's mu minus lambda times sigma, right? Or mu minus 2 times the standard deviation. Okay, so it's very easy, and the moving average here, which is the middle one on the band, is 20. Why 20? Because if you take a look carefully on the month, we traded 5 times per week. So Monday, Tuesday, Wednesday, Thursday, Friday. So times 4 is 20, right? So we traded 20 days properly in the month. So that's why his creator take a 20 period for the moving average, right? So it show you when we have like a low volatility, the band will shrink, right? We have a tightening band, and when the market we have a huge volatility upcoming, the band spread over, right? Spread a lot. So that's the principle. So another indicators. So there's a 6. Number 3, right? Number 3 would be the moving average. So moving, this is a French, so moving average is here. So moving average, so let's take the moving average, the 50 or 30, why not? Okay, so basically moving average is again statistically, and again, as you see, most of indicators that we show you, there's like a very a property, statistic property of the market, because statistics is very important in financial market, because it's show you like a sample of the market, so a kind of picture, and you can make a deduction, hypothetical deduction on the potential movement of the market. So that's why I'm stuck lots of time with like a statistic indicators we can apply, especially Bollinger Band, moving average, and another one that I won't tell you in this video, because it's the biggest part of my my approach. So there's 6 indicators I will just unveil to you, just 5 basically. The other one, it's totally part of my strategy that I teach through my academy. So if you follow me, you can definitely know what I'm talking about, but I won't tell you in this video for sure. And if you learn it, so you can please take a look on what we offer. But the moving average here, I use the moving average and the Bollinger Band, because it's very important to have a certain vision on the market, where we potentially have the movement for the market, if we consider the market is bullish or bearish or neutral. And the moving average show you that, right? When we are a downward pressure, we saw that the moving average is constantly drop with the market, and it's usually a bearish market, it's above the candles, like moving average, and the opposite, when the market is we have upward movement, the moving average is above, below, sorry. So it could play the role of the support and the resistance for sure, when we put the market with the close line, right? The close is very important when you use the moving average. This is a quick tip that I giving to you, right? We have just to consider the close, because that's the most important in this for the use. Okay, so moving average, I used to take moving average for the exponential moving average, because mathematically is a kind of it taking account on any dynamic movement, even we have exaggeration on market, or we have a short squeeze of erratic movement, it's very important to have like all this calibration weighed into the moving average, right? That's why I use as the exponential moving average or the weighting moving average. Okay, so so we talk about RSA, Bollinger Band, moving average. Those are three. It's just left two. So number 4, I will talk about the pivot point. Okay, very important indicators. So it looks like very intimidating, but don't worry about it. Okay, pivot point is a very useful when you're doing day trading, right? Because pivot point, when the market is very liquid, as like a futures contract, if you day trade SVSP 500, or if you day trade futures contract of gold, or you want also doing day trading on the day trade on the like most of liquid market, right? It show you that you don't have to consider just only a certain line or threshold that you draw, and you believe naively that it's the resistance or is the support. In the financial market, there's a tons of support, a tons of resistance, and the pivot point show you that, right? And when you see that the these different levels are very tight, that being said, that this level is very weak, that the market could easily break that. For example, you see here, if I zoom like quick, you see the difference, the distance between the pivot point and the resistance one, right? Pivot point and the resistance one, you see a couple distance between that, right? And also we see also a certain difference, which is could be some of wide between the R1 and R2, right? So it's just significant that the market we have a difficulty to reach that level. But if you take a look on others like the R3 and R4, or the R4 and R5, it's some like very narrow, right? Very narrow, and is not wide as the distance between the R1 and R2. So this information will tell you that this level, it will be difficult to going over that, and this one will be not difficult to going over that, right? The most of time that the level is very tight, the more that it means that the market could break that easily. That's it, right? And the pivot point, the calculation is very easy. We just take the highest point and the lowest point plus the close, basically, and we divide by 3, right, to have the pivot. So the pivot, this the level that the market could, when it is break that, we always have a pullback, and after going up, right? So basically, in the case of the gold, we see here the pivot point here, the market could doing like a throwback here, because when we go up it's a throwback, when we go down it's a pullback. So it will doing a throwback here, and after going to reach the next level, which is close to the 1315, right, or 1315, right? So this is basically the pivot point. Very proficient indicators. Most of day trader or analysts also use pivot point as the same thing as the RSI. Okay. Number 5. Okay. Number 5, we have the Ishimoku, right? Ishimoku. So we got lucky with Ishimoku, because in GSTA we have an a specialist, international specialist of Ishimoku. Ishimoku have been created basically by Goichi Osoda, which was a financial journalist, Japanese, at in 1930, right? So it's years close to the Second War. So at that time, I don't have like the proper date, but I know it's close to this date. And Ishimoku has been sometimes very intimidating indicators because there's a lot of curve on the screen. But in GSTA, we got lucky because we do a partnership with someone who's a very, reputed for the use of this indicator. She's wrote a couple of books, and she's basically a private hedge fund manager, and he used technical analysis based on this system, because Ishimoku is not only an indicators, is also a system. Her name is Karen Pelwal. We have the honor to have in partnership on the GSTA. So if you're interested to know more about Ishimoku, we will provide Karen Pelwal for you, and she will help you definitely to have like a certain level of mastering of on this indicator. Basically, I didn't use a lot because it's not my style, but basically the Ishimoku, it gave you in one shot, when you take a look quickly, the equilibrium of the market, right? It will show you that. And when the market is on trend, that being said that the market is in disequilibrium, right? And when the market is not in trend, that being said that the market is equilibrated, right? And we have a couple curve. The name was a Japanese. They keep the Japanese name for the curve. This gray line here, or white line here, is they call that, in English we call that lagging span, but in the Japanese they call that shiku, right? This is a shiku one. We have the tenkan, which is the tenkan is the blue one. Tenkan, it's kind of like the line for the pre-signal. We do also have the kijun. The kijun is the purple one. It usually play the role as a support and resistance, so it's very important. It's playing a crucial role on this system. And we have also the clouds. So the cloud, we have the SSA, which is the upper side of this cloud, and also the lower side, which is the SSB, right? So basically it's that, and I won't going further because I didn't use a lot of Ishimoku. Sometimes I use that for my analysis. I know just the basic things, but I'm currently trying to master that, because I got lucky to for collaborating with Karen Pelwal, and she showed me a lot of things. I also bought her books, which is completely and definitely you can have like a tons and great things and great tools about this indicator. So fantastic indicators. I will let you with that. The last one, indicators, it's the volume. On the CFD, unfortunately, we cannot have the volume, right? We have the volume on the futures market because all the markets are centralized in marketplace, as like the NYSE, New York Stock Exchange, CBOT, Chicago Board of Trade, NYMEX, New York Market Exchange, Mercantile, blah blah blah. Those marketplace where you can have all the transaction for all the trade in the world. Place it in order, and you can there's a tracking number for each transaction. But in CFD is between you and your broker, so there's no centralized market for that. So that's why there's no volume, there's no true volume to see all the transaction for the CFD market. If a broker show you a volume, it's fake. It's just the transaction for his customer. Actually, it's not this transaction for all the world, right? So very careful with the volume suggested by broker, because it's not centralized market, right? So volume is very important because it shows you the activity of the economy basically with the quantity, so we can have like a definitely the great profile of the market. And also the last one indicator, as I said, I cannot teach you that because it is part of my strategy, my system. All my students know what about these indicators, so I reserve that for my student. And if you want more about that, I definitely, you know, and kindly recommend you to keep in touch with us, and then we can teach that properly, because it is a completely, and for me is in my 11 years on the market that I spent, these tools, these technical indicators will definitely change how you trade and how you can use that and combine that with others indicators, which is great, and it just increase the probability to make money, like definitely each day in a sustainable way. Okay, so thank you so much for watching this video. I hope that I giving to you and I believe too that I giving to you the great explanation about these indicators. No matter what, the indicator could not giving you the holy grail, but it's important to have basically, if you're day trader or swing trader, why not, you can have some tools that you can use that properly, and then follow the market properly. Okay, so thank you for watching this video. Please like it and share it, and also don't forget to subscribe in our different service and also different platform. And if you have a question, you can leave that below the comment, and also send us an email as a contact@globalstreettrader.com. Thank you so much for watching this video. It was Français. Thank you.